because the Russell is definitely concerning, right? I mean, there's a reason why it's getting just annihilated. Maybe we look somewhere else. And let me just pull up a spreadsheet for this one. And by the way, I do this with every single trade I make. Every single trade I make. So if we look at Nasdaq, S&P, Dow, the dark green line, if we were to buy the dark green line, we're buying one S&P and we're selling one Dow. So we're buying that, we're selling that. These two are both relatively expensive to this green line, right? I mean, there's a clear disconnect between those. So now we can look at NQ versus YM. NQ versus YM, you know, if we decide to sell that, we sell and we buy, our net position is there. Or our net position is just this spread. So maybe it's an opportune time to look to selling the Nasdaq versus the S&P spread, okay? Because we see such a big disconnect here. And you can also do this, you know, with this. By the way, this handy dandy tool, Pablo built this. Pablo built this after going through the coaching program. He's just a really good developer, so he took all the lessons and then put them into a tool. What we can also do is we can look back to as much data as your chart will allow you to do. Thinkorswim will allow us to go back 20 years. For the Russell, we can only go back, you know, 3 or 4 years because that's how long the contract is. Okay, so now we're just looking at more data. And if we look at more data, will this still stand up? Well, down here, green, so yes. Up here is going to be yes. So it's still the same trade, right? It would be short, yeah. It would be short this. So that looks like a really good trade. If you just trade, now what can we do with this? Well, if we like this trade, if you want to get short, I would only sell Nasdaq. If you want to play from the long side, I would only buy S&P. If you need a stock to short, I would look in the Nasdaq to find something that's strong in the Nasdaq in order to short that stock. Okay? So these are always kind of like the exercises that we're doing. Does anybody have any questions on this? Does anybody have any questions about the relative value equity trades? Okay. So the next thing, so this is equities. Let's go to energies because this is some place that I just shared a trade idea in the coaching room. And I think you guys can all benefit from that as well. You can do the minis, yeah. You can do the minis, the same thing. The minis are going to be pretty much perfectly correlated. It's just a way that you can do, you know, a tenth of the size. So the same thing here, guys. This is just energies. We're just going to analyze looking at energies. And I put out a video on this last night, and I can walk you through the trade. Throughout my 22 years of trading, especially during high volatile times, everything that we do, every decision we make is using relative value, something tied to something else. So in front of you, we have CL, which is oil. Oil's up 11% right now. So this lime green is going to be oil. Oil, the way to look at this, if you bought one oil contract at the beginning of the chart and held the lime green line, you'd be down 27,000. If you're short, you'd be up 27,000. So CL, that's oil. This is heating oil. Gasoline, RBOB gasoline. And then up here we have natural gas. So again, CL, Brent, I just left off, heating oil, RBOB gasoline, and natural gas. So that's what we have on. What do we see here? What do we see here? Right now, is it fair to say that heating oil is really, really inexpensive relative to natural gas? The orange relative to the green? Pretty obvious, right? If you look back, this is what we want to do. These are trades. Yellow line, natural gas above the other two. Yellow line below. Same thing with RBOB being the orange line. Gets very, very inexpensive, rallies. Gets inexpensive, rallies. Now it is really, really, really inexpensive. So knowing that, we could start backing into a different trade, okay? I shared this in the coaching room earlier. Instead of doing the futures, we could do the same exact trade with ETFs, okay? So with ETFs, I just put UGA, which is an RBOB, a gasoline ETF, and then UNG, which is a natural gas ETF. And so just like in futures, where you find the trade and see the value, you can then go into options or ETFs, okay? And so what would you do? So UGA, so gasoline, UGA, this move happened in about a month. So I would think that I want more than 14 days. What about maybe coming here and being a $1.50 bid? A $1.50 bid to get long the 13 strike, which would get us long gasoline. And then at the same time, UNG, May, maybe you do these, or actually go out of the money, do the 12s. And then you have a nice little pair trade. Instead of doing it in futures, you're able to replicate the same exact trade. Terry, you came and said, this is a lot of money. If you're not comfortable with this kind of risk, you could always just buy UGA. And if we can look into buying these for $1.50 on a 10 lot, that's $1,500 of risk. That will get you long the orange line. And then to get short the yellow line, we can buy these 12s. And for something like that, I would do a weighting of $1 for $1. So risk $1,000 on one side, I would risk $1,000 on the other side. The stocks are pretty much the same price as well. So be creative, okay? We are using this in here. We chart everything based upon P&L rather than do it based upon ticks, so we can see exactly what the potential would be for a move. Now, these are all outrights. I can just do it over here and move them all to spread. RBOB against oil is right down here. Heating oil against oil, heating oil against RBOB. So we're constantly doing exercises like this in order to back into trades and see what's expensive and what's inexpensive. Is it worth, Kirk? That's such a great question. And the question is it worth to try to find fundamental reasons why the disconnect? It's a good question. The short answer is no. The short answer is if we look for real disconnects, the real disconnect happened here. We don't have to look of why there's a disconnect, right? We know right there, things are changing in the world. Overall, though, when things break down, I wouldn't get in a habit of trying to explain every move that goes on in the market. So oil right now, oil was up 10% 2 days in a row. That is an awesome explosive move. For that, yeah, you want to understand why. But overall, a lot of it is just noise. The reason, it's like RBCL, by the way, I don't like how RBCL is not really correlated with the other ones. So I'm going to take it off because it's bothering me. And it's bothering me because I don't think it has the correlations looking at this chart. So I'm just going to take it off. Okay. And now, heating oil seal. Whoa. NGRB. NG is 2 actually, so you have to watch your ratios. Like I'm a big believer, guys. I'm a really, really big believer that if we see relationships that are really, really closely tied together, and we see those relationships are dependable year after year after year, and all of a sudden, those relationships break down a little bit, that's a trade. In my mind, that's why my business card says trader. That's what I'm looking to do. I want to look at a whole bunch of different markets. The role of the trader, and I say this all the time, is to keep markets efficient. That's why traders exist. So if we put some data on this chart and look 3 years, and I'm sorry, I don't know, this will take a second just because okay. Looking back 3 years, I don't know about you, but it sure does seem that when this happens, there's a right and a wrong side of the market to be trading from. And don't misunderstand me, because some of you are thinking, well, heck, you want us to put on a trade and wait for 6 or 7 months for it to come in? I am not saying that. But what I am saying is the disciplined, prudent trader can sit on the sidelines and wait for opportunity to present. And opportunity to present are the spikes down. Those are the trades, guys. Okay? You don't just sit there with your arms folded and just sit there forever and ever and ever. Be active. Trade. So I just took it off the 3 different spreads here. You can obviously see we can put on as many spreads as you want.